Good evening. It is Monday, April 5th. It's around midnight Eastern Standard Time. By the time I get this uploaded, it's going to be April 6th, Tuesday, after midnight. I want to do a quick trade recap on my trade today in NNOX. Slightly different format than we used to. I organized all my thoughts and data into a couple of slides. Try to make this easier, concise, and shorter. So without any further ado, let's get right into this. Now the trade here, this is the screenshot of my gap scan from this morning. As you can see down here, NNOX is the leading up gapper based on my gap scan criteria, which for the record, go over real quick right here. My gap scanner scans for anything gapping up or down at least 3%, price of at least $10, relative volume has to be at least 2, and a 3-month average daily volume of at least 500,000 shares done. So it's nothing fancy or sophisticated. It's just a, it's a regular gap scanner. And this is what was coming through this morning. So I did have on watch, just for the record, NNOX, DMYD, GameStop, and ACAD. However, all my focus was really on just NNOX this morning. Just to go over some of the key stats, you can see them all here. I'm not going to go over every one of them, except for the two here that I have highlighted in bold. The 57% gap up, and the RVOL of 159.84, which is extremely significant. So we have a gap that large on relative volume that high. That's the stock that you want to watch. There's going to be a play there. If you're patient for it and make that setup, you'll have a very nice day. So with that being said, the only other thing that really caught my attention out of these stats here was the institutional ownership. It's only 6.7%, which, I figure if the institutional ownership is that low, that might be, in my benefit, as far as price action and how it moves, and the psychology that I would employ to formulate a trade plan. The INSD down here, that's insiders, executives and those on the inside of the company. So more of a big picture. We're coming off the long 3-day Easter weekend. The market was closed on Friday for Good Friday, but all 4 majors this morning were gapping up. As you can see over here, this is the ES, NQ, the Russell, and Dow. They were all gapping up. Friday morning, even though the market was closed, there was the job number put out, and it was a very strong number, a lot stronger than I even expected to see. So there is still a lot of optimism in the market. I don't quite understand it, given the economic situation that we're in, but that's a topic for another video. Nevertheless, there's a lot of optimism surrounding the economic recovery, around reopening, people getting vaccinated, yada, yada, yada. So we're moving up on that, and we have another new all-time high made in the Globex trading session. And as we all know, Globex all-time highs hardly ever hold. If I'm being honest, I cannot remember going back 3, maybe 4 years where an all-time high made in Globex did hold. The most recent one, not this one, but a couple back maybe around September sometime, did hold for a couple of months, but nevertheless it still came out. So we were opening on a plus or minus 25-point gap, and we did have this price spike here. That this is Friday's trade. And we had this late day move, putting in a new high of day, and it closed above. So anything above here is considered bullish, and that would be on the bullish side of the ledger. Quickly going over gap rules. When you have a large gap, like we did in the ES this morning. And this is all based on market profile teaching. You want to go with all gaps that do not fill right away. This is just a review of gap rules. And right away is in quotes because that is a very relative term. There's no hard and fast definition of what right away is. I guess that comes with experience, it comes with screen time. But the way the rule is written, go with all gaps that don't fill right away. Larger gaps, which I also have in quotes because in this current market we're in these larger range days, the increased volatility, a large day used to be 10, 15, 20 points. Now a large day can be 50. So it's all relative to the time frame and the environment in which you're trading. So quote unquote larger gaps can often fail to fill on the first day or may only fill partially. Very often we will get a 50% retracement into the gap and then price will reverse. If the gap does fill and the value also, value area cannot get to at least overlapping, we increase the odds of a late day rally or late day sell off, and large gaps. I wrote down $10 or more because that is the actual definition, but that is an older definition. With today's volatility, we can go as high as 15 to 20 points on the gap. They can prove difficult to trade. As always, the safer option is to stand out the first 30 to 60 minutes, let the market digest that gap. But if you have a little more experience, you know how to use profile nuances and whatnot, you can really get in on a killer trade early on. And even though we had 100% overnight inventory long, which usually corrects, we have so many other things on the bullish side of the ledger that, unless the ES, like I say here, unless the ES can't accept below the Globex high or do a look above and fail, it's almost a guarantee that today was going to be a move higher. You had a lot of shorts getting in, I believe, and a lot of today's move, which was a P-shape, it was a P-shape profile today, which is indicative of shorts covering. So my hypothesis appears to be correct, that there were lots of shorts building in, thinking that we were going to have at least maybe the start of a short-term top after the holiday. That was my educated guess based on my analysis of the market, analysis of price action, of the profile, of all the tools that I use to analyze the market. I did have that feeling that other traders were getting involved short, thinking that the sell was coming, and they got squeezed out hard today. And interestingly, we did have a high volume node near the Globex high. Let me get out of this for a second. Back to the I'm going to pull up the profile here for a second. I'll show you what I'm talking about. We have this high volume area right here. In fact, it's pink, so that was the actual volume point of control for the Globex session. And if you can see, if I'll highlight my cursor, you can see how it tested it to the tick. And literally to the tick, it tested this level of volume, the highest level of volume in the Globex session, which is pretty interesting. That right there is also pretty much a telltale sign that this here is demand, not supply, and that there is no interest to go any lower. That this is going to act as your support, at least in the short term, coupled with the fact that we only did 9 contracts, a whole 9 at low of day. And we opened up right here at this red line, and we did a nice little look below. No more interest. Volume tapered off down to 9 contracts, and then as price started coming higher, you can see the volume building as we get into deep here. So that was a very interesting little nuance that I saw this morning, that if we did look below here, we were going to test either here or here before coming back higher. There's the gap. And this here is that price spike that I was talking about. The gap rules. Yes, and then we have the potential signs of weakness. There were two gaps below. How long the inventory is, meaning the inventory was becoming dangerously long. Um, there's no supply in the market right now. It's pretty evident. The only supply is our shorts that are in the market, and the fact that much of the recent activity has been brought up at very visual, very mechanical level. So going back to the profile for a minute, you can see how this came right down to the high volume node. That's a very visual level. It's something that can be seen on a chart. It's very mechanical. What I mean by mechanical is that you can use this as a point to set a buy or a sell order. It's very mechanical in nature and very visual. You can see it on a chart. This would be another very visual mechanical area. Um, and as you can see, a lot of the price action. Oops, a lot of the price action is behaving that way. We're having lots of price action come within a couple of ticks of other levels and other references from other days, which is indicative of shorter term money in the market, more retail money, more non-institutional money in the market. Um, which means that when the sell does come, it's going to sell hard and it's going to sell fast because it's what we consider quote unquote weaker hands in the market, and they're going to be the first to bail when things start going south. They don't have that ability to hold through pain the way a larger institution does. So back to the slides. Now to the analysis of the stock itself. Basically, my thesis and my thinking on this was that a gap of this magnitude on this amount of relative volume has to be used. And what I didn't do is go right to briefing.com and look for what the catalyst was because I didn't want to formulate a bias. I had a thought that given the sector that this company is in, it's in the medical sector, but they don't do drugs. What they do is manufacture X-ray equipment. So I figured it had to be something along the line of either they got an FDA approval for a new type of X-ray, or they have a new product or product line coming out, or a patent, or something like that. Which, if it is something like that, historically, those do sell hard. Those are a typical buy the rumor, sell the news type setup, which I keep keeping back in my mind. We did have 6450 as a key longer-term inflection point. We did spike over it early in pre-market, and I'll get to the chart in a moment. Sold off, retested, and we couldn't get a new higher high in the pre-market. So, NNOX did put in lower highs into the open, and just before it opened, we did break VWAP and accept below it. So these are a bunch of variables setting up on the short side. We've had a descending macro trend line, which I will show you in just a moment, and price being very far away from the 5-minute and the 15-minute moving averages and the daily pivots, and a P-shaped pre-market profile, which I'll get to that first. Here's the profile for NNOX, and as you can see right here, this is about as P-shaped as they come. This was the pre-market right here in purple, and this is the B shape that formed right after the P. This was all longs getting out. This was what I figured was probably going to happen today if it did sell hard. So here's your P shape that I was talking about in the pre-market. And then on the actual daily chart, this is that descending macro trend line that I was talking about. And here's that 6450. This is the key inflection point on the daily chart. You can see every time it's tested, there's a reaction, and a pretty strong one at that. Every time this is tested, there is a strong reaction either way at this level. So when I notice the trend line intersecting with this key inflection point, I wanted to see what price did at this level, and it turns out that price couldn't even come up to test this level. It was so weak, which is one of the factors that I used in taking the trade this morning. And there's just the same chart again. And I did go back midday to look up what the news was, and it turns out that I was kind of on the right track. They got FDA clearance for some type of digital X-ray. You can read the article and look it up. I didn't really look into what it means, but it says that shipments will in Q4 and Q1 of 2022, blah blah blah, by 2024. So it's nothing immediate, which also would kind of go with the sell-off type setup, buy the rumor, sell the news uh, type of situation here, because this will have an impact on the core of their business, but it's not going to have any kind of impact for at least another year, if not more. So it's good for forward-looking, for long-term investing, but in the short term, it's basically meaningless. So that's probably why it popped and dropped. So as I was saying, my thesis and trade plan, whether the intent of the OTF, which is the other time frame, the larger money, whether they were going to sell this off today, they were going to sell the news, or whether they were actually going to keep the gap up going intraday, either way, I felt the odds strongly favored an early sell, sell right at the open. Either they were going to, because the overnight trade, the pre-market trade was so long, so to speak. It was up so much that you would think they would correct a little bit before it actually continued to sustain move higher. People would want profits after that kind of a gap up, which is the psychology behind why I was thinking it would be a short. So if the opening 5 minutes shows weakness and the initial move was down, I would enter a starter position, just going off highs. Looking for ads on retracements back to VWAP, which is the trade I took. However, I did not get my retracement because this stock was so weak this morning that I didn't really have a chance to add properly. And if the initial move was up, I would watch the pre-market pivots and intraday price action for signs of rejection. My targets here would be the 5-minute 50, the 15-minute, and the 5-minute 200s, and the other lower levels if it was really, really weak. And then I just go into some structure here. And this here, if it was really, really that weak, I would have no problem taking my small position and swinging it. And this is also what I do every morning. I kind of just, make a column bullish, bearish, and I want to see where the facts that I'm putting together, with data points I'm putting together, where they sit on which side of the ledger here, is it bullish or is it bearish. So I had a lot of factors on my bearish side and not much on the bullish side here. These are my entries here. I got my first entry here when the tape started showing weakness, and we were just kind of selling straight off. And then I took an ad right here on further weakness on the tape. I really wanted some kind of dip and then retracement into VWAP here to really go in heavy and then kind of get this move. But this stock was so weak this morning that it didn't do that. It kind of just straight down. So as it was coming down, I started taking off from my position, and then at this point here, I had such a good average, and I was so far from my entry that I kind of just let it work, which is, the proper way to trade. You're in a winning position. I've added, I paid myself a little bit here, not my whole position. As you can see, I still had more to pay out. And I am still riding a small piece. Was my small, 5-10% of my original position that I have on. I am swinging it overnight. We'll see what happens to it in the morning. But if you were reading this while I was talking, you can see that heavy algo selling, which tells me that the other time frame was likely in control, And the way I was able to tell how heavy algo is right here. You take a look at the volume on the profile. You see how every price point is the same. Every price point is the same. Every price point is the same all the way down. You see from where we opened, way up here, all the way down. This is all machine selling. This is all algos. It's the only way that every price level will be identical. These are all algos programmed to buy X number of shares, so they're buying at each price level. They're just taking liquidity, and this is the way institutions break up a large order to disguise their intentions. They'll take out, say that this is a 5 million share order. I'm just making up a number. They'll buy 5,000 at 63. They'll buy 5,000 at 62.99. 5,000 at 62.98. And they'll even buy in between the pennies. If you ever notice on your level 2, on the time and sales, you'll have fractional penny prints come through sometimes. It'll be like 62 and 62.9837 or something to that nature. Those fractional transactions, those are algos, HFTs, and most likely they're occurring because the computer is being told to divide the order up into many, many smaller orders to make it look like it's retail, to make it look like it's non-institutional money, so that the bigger boys can hide their intention. That's what this is all about. This is all large orders broken down into smaller orders to hide intention. So this was a huge, huge clue that this was going to pretty much, that the big boys intended to sell this off the entire day. They knew before the market opened what they were going to do, and as soon as the bell rang, the sell algos turned on and sold the shit out of this thing all day. And that was a huge tell. If you have the profile and you know what you're looking for on it, this is a huge tell that this was going to sell all day. Here we are. So monitoring for continuation, the way we do that is, we opened on on an open test drive down. We had the highest accepted price, which is a very unique nuance that you could only really see in the profile. I mean, you probably can visualize it on a 30-minute bar chart. But what we have here is a highest accepted price or a lowest accepted price can only happen in B period, which is the 10 o'clock to 10:30 half-hour period. It opens, and it either just it drives in one direction, or it only ticks up 1 or 2 ticks from the open, which is this red B, before moving directionally. This is a highest accepted price right here. Another bearish variable. We have the single prints right here. Another bearish variable. What else was listed? We one-time frame down until G period. In fact, I think the first 4 or 5 30-minute candles were all red. So that's another telltale sign that this is working. And the point of control and value migrated lower. And the reason why I did swing it is because this kind of just meandered sideways the rest of the day, closing in the bottom 20% of the range. So there was no reason really to not take it home and at least, see what happens tomorrow. See if we get any further move down. And finally, for my trade logging and journaling, every day after the market is closed, I ask myself the 3 questions. Did I do my job today? What did I do well? And what can I improve on? What are my goals going forward? So did I do my job today? Yes, I think I did my job very well today. This is one trade that I can say I'm very proud of. I traded it well. I could have traded it better, but I mean, for what I got, for what I did and what I got out of it, I'm truly happy with the trade. What did I do well today? I focused on one main watch. I did have others up, but I was really intently focused on just one stock. I got entered early. I allowed my winning trade to work. I think I read the tape pretty well today. My emotions were in check, and I saw things well today. I was very self-aware. I'm not sure. I was almost in the zone. If lack of a better term, I was almost in the zone today. I just saw things setting up. Um, I was in a good headspace. Um, and what can I improve on? What are my goals? I did hesitate a little bit at the open, but then I quickly gathered myself together, got in the trade, and the rest is history. Um, what I should have added on pops. On these pops, this pop here and this pop here at minimum, I should have been adding back in and then paying myself on these down moves. Uh, Increasing my size, I definitely, on a trade like this is a trade where you definitely want to be in full size. There's no reason why, no, that's not the right word. This is definitely a trade where you want to be in full size because you have so many variables in your favor um, that, by adding in properly, move, pay, add back in, move, you can really size it appropriately. This only gave a little bit more of a pullback too. I mean, I probably would have been larger than I was. These two red shorts were basically two starters, like two starter size positions. So it was a decent size, um, but it definitely wasn't my full size, and I would have liked to bid in bigger. That's something that I will be focusing on going forward. And like the last bullet point there says, rinse and repeat. Just use this as a model and just keep doing this going forward. So, um, yeah, I had some thoughts this weekend when I was sim trading, and I was talking with Chris and guys, and it got me thinking of the things that I need to do, and I need to journal. I need to keep everything logged. That's why I decided to put together the slides. That way I have a way to organize my thoughts and keep everything together, and I have something I can review at a later date. So that was my trade today. Try to keep this short as possible. And hope you enjoyed it. I hope this helped. I hope you got something out of it. And I will see you all in the room, man. Ciao.